Hey, good morning, everyone. It is almost 9 o'clock on Wednesday, November 22nd, 2023. And for my viewers here in the United States, I want to wish you in advance a happy Thanksgiving tomorrow. So it is a holiday week here, and so the markets really after probably about noontime today will probably die out for the rest of the week. For sure tomorrow and even Friday volume will be light. So as you can see on the screen, I know I usually introduce myself as Forex Brizio, but I have officially made the change to futures trading only. And I think I had referenced this maybe in a past video or two about this. And so I just wanted to kind of officially make the announcement and just provide just a brief context about why I made that decision. So I've been trading Forex for about 12 years. And I've been trading futures. Well, I mean, I was trading them on and off for about the last maybe a year or so, and then I stopped for a while, and then I went back to it, and then I stopped again, and then I went back to it recently, maybe in the last 3 or 4 months. And quite frankly, just in terms of the time of day that I like to trade and the way these markets move and the fact that they're centrally traded on central exchanges, so you don't have the as much of the variability within brokers and the way price feeds work. I don't really use volume and those type of tools, although if you're going to use volume and market profiles, volume profiles and all that, if that's something you like, you really can't do that in the Forex market anyways, because they're not centrally traded. It's decentralized trading on just with brokers. So you don't get that true volume figures that you get in the futures market, which are all exchange traded. And so I just decided for several reasons, but like I said, basically in terms of the time of day I like to trade, kind of the way the chart patterns work out, and following just a much more narrowed fundamental picture in terms of news and what I look at. And just not having to trade and look at so many different markets. Now, of course, in the Forex market, there's dozens and dozens of pairs you can trade, and nobody's telling you have to trade them all. But, I narrowed it down to about 9 or 10. But, within that 9 or 10, if you do, like, say, 10, well, then you have multiple currencies within there that are paired up, depending on what you're looking at. And then you have to be able to follow kind of the fundamentals and the underlying drivers for all those different currencies. So unless you're only trading one pair, which I don't think is a good idea, because if you like trading, into trends and impulsive moves, well, there could be, you could go through an extended period of time where that pair is not doing anything. And so what are you going to do? You just going to not trade for weeks and weeks, and so you usually end up having to trade multiple pairs. But like I said, then when you do that, you end up getting into the situation where you have to, be able to follow the trading, the fundamentals of, multiple different economies and currencies. And so, basically, those are the type of reasons that I decided to move away from Forex and go to futures. I think chart patterns and technicals are a little bit easier in the futures market. Not easy. I mean, no trading is easy. But I think they're better here. And again, the time of day that I like to trade, which is usually like the, early New York session, from about 9:30 Eastern time. Well, actually, for a couple of the markets I look at, probably earlier than that, maybe as early as 7 or 7:30 New York time, up until maybe, noon to early afternoon, and then that's it. And these markets trade about 23 hours a day. So they are, in that respect, similar to Forex in that they trade around the clock for the most part. There is a little bit of a break at the end of day for a short time. But for the most part, they trade 24/5 too. And, but like, in the Forex market, that's the overnight session, which is Asian session, and I don't trade that anyways. And in the futures market, that's mostly just overnight retail trading, and I don't do that either. Most of the volume really is going to happen, in the morning hours, during, kind of regular trading hours. So there are a lot of similarities in trading times. It's just a matter of, what you choose to do. So, I've gone ahead and changed my YouTube channel to Futures Brizio instead of Forex Brizio. And, this, let me tell you, it was a major sea change from where I've been the last 12 years. I've been mulling on this decision for a long time, and yesterday morning I finally just pulled the trigger. And my Forex account is still open. I did withdraw most of my funds back to my bank, and I probably will add it to my futures account here at some point, maybe next week, and we'll see how it goes. So jumping over just quickly to the futures. So the markets I've decided to trade, and I know you can't see everything here off to the left, but is this is the S&P, the ES, which is the S&P 500 futures. This is the NASDAQ 100, or the NQ, which again is the NASDAQ 100. And again, you can see that they're very similar, and that's why I like to trade these, because one is usually a good confirmation of the other one, because sometimes you'll have motion on one that's not confirmed on the other one. And just in my opinion, from my experience, is that when they're both kind of impulsively moving, then that's a much better setup, even if you only choose to trade one of them. And I prefer to trade the NASDAQ. There's just a lot more profit potential in NASDAQ trades for the same size contract or the same number of contracts. Of course, on the flip side, there's more risk too if you're wrong. So, but I do trade both of them. And I'll just trade the one that has the clearer setup, the better entry, but I do like to see confirmation on both of them. And, I'm still playing around. I kind of go back and forth between just naked chart trading and using a couple of indicators just for trend trading. So this is the hourly chart. This is just a 100 period simple moving average, and a 2-line MACD just for trend re-entry. So this is definitely trend trading strategies. And again, I don't trade consolidation. I don't trade sideways markets. I didn't do it in Forex. I'm not going to do it here. But these are like some of the things I like to see that these do all the time. And, I can go to a shorter time frame and day trade this. In fact, let me just jump down a little bit here. So we saw this extended sideways motion here. This went on for about 2 or 3 days here. This is the NQ, and then you can see we finally broke out and went up. And if you scroll back, you can see that quite a bit of times here where this sets up. We had another one here. We had another one here. So I like to go to the shorter time frames, maybe down to a 10 to 15 minute chart, and look for these areas. And then the rest of the time, I'll go out to the 30 minute, the 1 hour, just to kind of get the bigger picture in terms of just entering on these MACD crossovers, which is basically, as long as price is trading above, I'm looking for buy signals. So if you look down the bottom here, now this was a consolidation area, but we also had a crossover signal right here. So this confirms this entry before it even gets out of the consolidation box. So it helps, I think, lower my risk a little bit, because even though it's still inside this consolidation box, you get this signal here. You can take the long, put your stop right here. It's a much smaller stop loss, and a better risk to reward ratio than waiting for price to break out of the box. If you went long up here, that's fine, but you can see you already left half the move on the table. And you put your stop down here. It probably ends up being about the same stop loss. You put it below this big candle, and let it go. So it's just kind of a matter of how you like to do it. But you can see these consolidations happen a lot. And this is actually my preferred entry method with these. If I see really kind of like choppy, non-sideways action, which does occur on some days, And, around the opening time coming out of the overnight session, usually these consolidation areas start in the afternoon session and continue on. Not always. Like this one started at, let's see, this is 20 hours, that's 7 hours after my broker opened. So that's like 9, this is in the afternoon. And so usually that's when you'll see these start during an afternoon session, and then they can continue on for 1 day, 2 days, 3 days, and then, finally you'll get that entry signal to go back long, assuming that the trend's going to continue. And so this is what I prefer to see, and, to see these consolidation zones set up during the afternoon of one session, probably continue into the overnight session because there's really very little volatility during the overnight session. Price just kind of does this overnight anyways, so that's why I don't trade it. And then look for, once the market reopens, to look for some areas to enter back in. Now, sometimes you get these signals before the New York or the Chicago open, because these are traded on the CME, the Chicago Mercantile Exchange. So, the official kind of open time for that is 8:30 a.m. Chicago time or 9:30 a.m. New York time, which that is right about here on this chart where my cross, so that's this candle right here. You can see this long signal actually came in about an hour or two before that. So sometimes that will happen where price will start to move before the official U.S. session open. So in that case, maybe this would have been your entry up here. So there is some variability in terms of what time these entries come, but the nice thing is they don't come generally at 3 o'clock in the morning when the London Forex session opens, where I'm definitely not going to be on the charts. But I might be on the charts at 7 a.m., 2 hours ahead, which I still would have probably caught this entry, but I'm not going to be on at 3 a.m. During London, and you miss that whole move, and by the time you get to New York session, it's pretty much done. So so that's the nice thing about these. And sometimes the signal comes right, at the New York Open here, at 9:30 New York time, maybe 10 o'clock. Usually, it's, again, that first 30 to 60 minutes, similar to Forex, where you kind of let things kind of wash out. Unless there's a major news release early, then things can get really dicey. But on a normal day where there's not a big news release, then you can just sit and kind of wait. If you're not already in the trade from earlier, just kind of sit and wait, let that first half hour go and see where things play out on the session. So this is what I like to do on these assets, and that's the same for the ES and the NQ, because they pretty much, again, move the same way. And the moving average is just kind of a way to just gauge the overall trend, just give you a visual trend. So here we only be looking for sell signals here on the MACD and ignoring buy signals, assuming that you're just following the trend. And then here we have cross back above, and so now we have an uptrend started. So from obviously all the way up here, we were only looking for longs. And then the other two that I trade is is crude oil. This is WTI crude oil, and this one, again, kind of debating whether to use the indicators or just raw price action. It's because this is a completely different market. The way this moves, I think this is driven more heavily by fundamentals, so it can be pretty volatile. And this is oil just in terms of, world demand and world supply, and just basically how traders feel about the news that's out there on oil, inventory and supplies, and whether OPEC's going to make cuts, and whether, war in the Middle East is going to affect oil prices. And you can see we've been trending down, so the market really hasn't been too worried about that stuff recently, because we're at prices now we haven't seen since, at least since the summer. And so, so that's oil. And then the other one I trade is natural gas. So these are natural gas futures. So, two energy sectors. And again, a very volatile market. I don't take a lot of trades on this, but when it does move, it's pretty nice. And you can, you can make some good points on this. So those are the 4 currently that I'm trading. These are all the same contracts. They're just later out months. These are like the January contracts, because the December ones, are going to be coming to an end here soon. But that's all that is. It's the same markets, just the out months. So I haven't, made any decisions about trading any other markets, like anything in like agriculture, grains or anything like that. I'm trying to just really restrict myself to a handful of things, just so you don't, spread yourself too thin. So, but that's what I've decided to do. And again, whether I continue to use these indicators or just go back to just naked charts, I haven't really decided yet. But I'm still playing around with it. And, just having this one moving average on here still allows me to see everything pretty clearly. So, then in terms of like news and stuff, for oil, I found this website, oilprice.com, really original. But, you can see, we see oil going down, then they have their news headlines here. Oil prices plunge as OPEC postpones meeting. And that's probably why, this is going. OPEC was supposed to meet on next week on the 26th. They postponed it to the 30th. And so, the news is like, oh, well, maybe they're not going to continue their cuts, or they're not going to make more cuts, because they had kind of said they were going to cut production at least through the end of the year. And that should theoretically drive prices up, but it hasn't happened, as you can see. And so, and they also have other stuff on here. They do have natural gas information here too, so it's not just oil. And so I find this is a good website just for some kind of like breaking news. Here you go. Top oil fund books largest outflow since 2016. OPEC uncertainty. So it's just using just technicals is probably not the way to go. You do need to at least keep an eye on the news. You don't have to be an expert. I don't have to be an energy market expert, but just to keep an eye on what's, being, bantered about in the market just helps keep you in line and help you understand why the price is moving. Sometimes there is no reason, to be honest. And, that's when you have to kind of question that it's just, a stop run or a liquidity grab or a retail run, when you can't really find why it's moving. But, what I just showed you on the chart there with oil moving, that's why it's moving, right? It's moving because of this stuff, right? And the technicals just help you find the places to get in and kind of confirm with, MACD crossovers and things like that. So, and I still use other websites too, like Trading Economics, just to look at what's going on. There's that oil price on there it is. So I'm assuming they stole this headline from oilprices.com. And I look at other sites like Financial Juice, and there you go. They have it up here too. OPEC meeting schedule for weekend has been delayed, and again, that's what's causing price to move. Since I trade, NASDAQ and ES futures, I found this website. This is NASDAQ.com, where they just kind of go over some of the releases in terms of like earnings and things like that. I probably won't use this a lot, but just to kind of look at it a little bit, and and so those are the kind of the main sites that I'm using. One kind of interesting thing is, so even though I'm not really exactly trading futures anymore, Forex, this is the Canadian dollar index in oil. This is oil at the bottom. This is the Canadian dollar. Now, usually these have a very positive correlation. When one goes down, the other one goes down, and vice versa, because oil is still Canada's biggest export. And you can see we've had quite a divergence on these recently. From this yellow line, we had Canadian dollar trading down, oil going up, and then we started going up on the Canadian dollar, and looks like it's still trying to go up, but yet oil is falling. So we've almost had an inverse correlation lately, which is interesting. And so if the Canadian dollar continues to go up, then, it'll be interesting to see what oil does. And I kind of let oil lead the way. So if oil is going down, then I anticipate the Canadian dollar will follow. There could be a delay, but I anticipate that it'll follow. But it hasn't really done that lately. If you scroll back on the charts, most of the time, they're positively correlated, but not always. And this is a time right now that they're not correlating very well. And so that you have to kind of scratch your head and say, why? Like, which one is right? If you're letting oil lead the way, then you'd say, well, if the Canadian dollar is, currently going up, then it probably will eventually turn back down if oil is going to continue down. And if oil is just kind of like bottoming out here and then it's going to turn up, then this Canadian dollar up move would kind of be confirmed. So it'd be interesting to see. So I do like to look at this correlation between the Canadian dollar and oil prices in particular. Again, I'm not trading the Forex, but if you were trading Forex, then this would be a good way to decide which way to trade the Canadian dollar, and then just pair it up with another currency that is moving in the opposite direction. So, but anyways, this is a good correlation to look at, and this is in trading view. So, that's it, guys. I just kind of wanted to make that little bit of announcement. So any videos going forward, I'll be doing a lot of the same stuff in terms of like technical analysis and things to look at on the charts. It's just they're just going to be futures markets instead of Forex. And I have to really change my mindset in terms of my, what I'm looking at for news and things like that to follow. And kind of get used to these markets. And like I said, for now, I'm just sticking to these four. It's pretty limited. Again, the NASDAQ and the S&P, at least on the charts, move pretty much hand in hand. So I kind of look at those, even though they're different stock indices, they do tend to move together. And I find when they move together, it's a much more solid trade to take when it's confirmed on both markets. Whereas if only one seems to be moving, the other one's not, then I tend to shy away from those. And then the two energy markets, which are completely different. Oil and gas generally absolutely do not have to move in the same direction, because they have their own underlying fundamentals involved. But I look at them anyways, and then I'll make a decision down the line whether I choose to expand that out to any other markets, such as other commodities. But for now, I'm not going to do that. This is plenty to handle right now. So, but anyways, so I'm going to leave it there, guys. Just kind of want to make that announcement. Those of you that are on here that are pure Forex traders, I apologize. If you no longer follow the channel because of that, I certainly understand. But if you're coming just for, for technical views, and potential things to add to your charts to help you with your analysis, and/or you're interested in futures or you're already trading futures, then certainly stick around. And again, I know I don't make a lot of videos because I'm not selling anything here. As I've always said, I'm not selling trading courses. I'm not selling signals. I'm not selling access to Discord channels and all that crap. If you want to do that, there's plenty of people you can do that from, and I'm not saying those are bad. Some of them are really good people, and some are just marketing scammers that just make money on their YouTube ad revenue and selling courses, and they're really not traders. So anyways, guys, that's it. Again, I wish you guys a good rest of the week. It's going to be a light week, so even if you're not in the U.S., just be prepared for very thin volume, no matter what market you're trading for the rest of this week because of the U.S. holiday tomorrow. And even though Friday's technically not a holiday, that post Friday in between Thanksgiving and the weekend is going to be very slow. So just be careful. Markets probably will have fairly thin volume and could have some weird price action just based on the fact that there's not a lot of big traders that are going to be in there, especially Friday. Definitely not tomorrow. But Friday, things will probably be fairly quiet too. All right, guys, have a great rest of the week. I will be back with some videos as I get more comfortable in here. Any questions, comments, please leave them below. And if you're just finding the channel, smash that like button. Well, smash the like button either way. And subscribe to the channel if you're just finding it for the first time. And I look forward to speaking with everybody again soon. All right, guys, take care.